Okay, we continue. Welcome back. So today we are going to make a top-down analysis for different pairs for next week. So if you're new, make sure you subscribe to our channel. And then we continue. So today, let's start with the US oil. US oil, that is for our time frame on US oil. We have this market structure. As you see previously, price created a shift here. Price created a shift here, a very good shifting. If you see very well. So let's put it out, change of character. So here, price created change of character, impulsive, and then that is pullback. So here there is demand for our demand zone. It is very valid demand zone because it has what? Endorsement here. You can see what is endorsements. Also have a lot of liquidity here. Also on the left side, you have break of structure. So it is very good SNT. Okay. So for next week, we are going to find buys on 50% of that for hard demand. We're going to find buys on 50% of that for hard demand. And then our target will be exchange liquidity here. We'll target this area. So expect next week US oil will pump up. Okay, so that is it on US oil. Let's see another pair, US30. Dow Jones, US30. US30 at this market structure will start with the weekly time frame. Weekly time frame, one weekly time frame of this mitigation of weekly demand and break of structure. Let's start with this point. You can see price break this previous high, created a very valid break of structure. Then after creation of that break of structure, you can see price retrace back to mitigate this weekly demand. After mitigation of that weekly demand, weekly candle or last weekly candle closed bullish with the manipulation. So it manipulates below previous candle low. It manipulates previous candle low. Also, it mitigates weekly demand and it closed bullish. So the bias is bullish until now. Until now, the bias is bullish. Okay. So exactly where we are going to sketch buy, use Fibo retrace to mark or to spot out that weekly range, and then we shift our time frame to lower time frame. On lower time frame here, we have this market structure. We are going to find buys from discount. From discount, let us use line. Turn back to weekly time frame. Back to weekly time frame. Let us spot out this weekly range. And then, according to time frame coordination, I shifted to 4-hour time frame. On 4-hour time frame of this market structure, exactly where I'm going to find buys from discount zone, where how to get a discount zone, apply FIBO. When you apply FIBO, you get accurate on discount zone. You have this demand and mitigated demand zone. It will be very, very clear demands for buys. Also, it's located on optimal entry. Okay, so we have to wait retracement to this area, and then first target to be on that external range liquidity. Another target, because there is no any high above, can use external extension tool. Can use extension tool to recognize next target here. Can target that area. So that is it on US30. Very clear setup. Also, another conference can see the sweep, this sell side liquidity here. Yeah, it is very good sweep. Okay. So let's see another pair. Another pair you can see Nasdaq. Nasdaq, we have this market structure for our time frame. A very good structure. Left side have break of structure there. Also, after that break of structure, we have this shifty. Get that shifty. After that shifty, we have SMT divergence here. Here we have SMT divergence. And then we have for how mitigated demand. So expect next week price will trace back either to 50% of that demand, and then we'll target external range liquidity or buy side liquidity over here. So expect it next week to buy Nasdaq from this area and then target to be over there. Very simple and clear. Euro USD. Euro USD, you have this market structure. You have this market structure start from high time frame, maybe on weekly time frame. I have this market structure. Last week closed the bullish. Last week it closed the bullish, as you see. Also, can shift it to daily time frame. I have this market structure. After that impulsive move, to down, you can see price created a pullback. So that is pullback, and then I expect next week price may continue to push further down. Okay, so how to spot entries? You have to shift it to lower time frame. Shift it to lower time frame real quick. On lower time frame of this market structure. So exactly place where find sales is from this for our supply. And right now price is on that area. So right now price is bullish because we have break of structure above this area. And then after that break of structure, can identify this as an impulsive move, and then that is pullback. So expect this pullback will trace back to this demand, and then later price will create another impulsive move to this supply, and then later it will drop. Okay, so for next week we'll find buys from this area. We'll find buys from that area, that for hard demand. So when you find buy, target will be on that supply. Make sure you enter the confirmation. If there is no any confirmation, then let's get in position. Okay, and then when price reach that area, which confirmation for sell. Okay, so when we sell from that area, on the left side there is that and mitigated demand. We'll target these demands here. Okay, so that is it for next week on Euro USD. Let's see real quick on another pair. Another pair, you can see Gbpusd. On Gbpusd, you also have this market structure. You can see here above, we have this for our supply is already mitigated, but it's not powerful. It's not powerful supply. Also below here, I have an mitigated demand. So expect the price may react from this supply to this area, and then later we'll find buys. And then we'll target this buy side liquidity. After sweep of that liquidity, expect another drop. So for next week, that is movement on GBPUSD. We expect. Okay, it's finalized the Goldie. Let's start here. Gold, you have this market structure for our time frame. Let's price take out this previous low. You can see we have clear break of structure can identify as a liquidity sweep, or sweep of sell side liquidity or external range liquidity. So let's put it out very clear. Let's put it out as liquidity sweep. After that, this sweep, you can see here on 4-hour time frame, we have what? Inverse fair value gap. That is one of very good indication of reversal pattern. You have that inverse fair value gap placed here. Okay. So also we have unmitigated demand on deep discount level. So expecting next week price may retrace back to this area, maybe to that inverse fair value gap with confirmation. There is no any confirmation with mitigation of that for our demands. Have 2 points of interest. That inverse fair value gap and this for our demands. For our demands. Have 2 points of interest. That IFVG and this for our demand. Okay. For our demands and IFVG, IFVG, inverse fair value gap. You have 2 points of interest. So wait, confirmation either here or here, then getting for a buy target above here, have imbalance, another imbalance here, have this imbalance. Okay, we'll target 50% of that fair value gap for next week. So if there is no any retracement to that discount level, it means price will raise up to this FBG first and then later find sales. If there is no any reaction until there, we have this liquidity. There's above there. We wait, liquidity sweep, and then we'll sell. So for next week, you'll focus on finding sell on that premium zone because last week candle closed the bearish. Last week candle closed the bearish. You see, last week candle closed the bearish. Okay, so we'll find buy long position for short term, and then when the price approach these levels, either this liquidity or this supply, these are selling zones. These are selling zones. So when you pick a buy, target this fair value gap. If there's no any reaction, find here on this section, no reaction, this supply. Okay, so that is it. That is it on gold. So you can see the XY. Last week we analyze. We saw that the XY is very strong to XY is very strong to this level, to premium level. So we are in counter trend until the price reach that area. So you have to find buys on all pair started with the USD. For example, USD card, let's say check and extra. Okay, can shift to 4-hour DXY. DXY and 4-hour time frame we have this market structure. So expect next week it will create the pullback. After that impulsive move, DXY it will create a pullback to this 4-hour demand. So we have unmitigated demand there. And then later we'll find buys. So when it will drop to mitigate this 4-hour demand, expecting gold will raise up, will buy, and then when this 4-hour demand will be mitigated, expecting short position, gold will drop. Okay, so that is it for next week. So that's currencies, and let's finalize by the what? BTC USD. Otherwise by BTC USD. BTC USD, we have this market structure. It take out this daily sell side liquidity. Starts again on daily time frame. Last week or last 2 weeks, we took a short position from that area. I think everybody created a huge profit on that trade. Okay, so the time frame of this liquidity sweep. On the time frame of this liquidity sweep, after liquidity sweep on that daily sell-side liquidity, price created order block here on daily time frame. After creation of that order block, price also retraced it back to mitigate this order block. The expected price will raise up again from that area. So BTC USD buy from that area, and then our target where? Target that area. I think it is optimal entry when you apply FIBO, that area, target that area, okay? Target that area. So when it reaches that area, it finds a reaction. If we give you a confirmation to sell, we'll sell. If no confirmation, we'll give a pretest and then we'll get in for bullish continuation. So Btcusd for now, we are looking for buys from that daily demand after liquidity sweep, which is very clear. It is very, very clear. So I think until there, everything is clear. Let's meet Monday when market open. Account management is available. Initial balance 1K. Profit share 50-50. Also, sign-on is available monthly with 20 USD. So make sure deposits, prepare account, and then see you on Monday.